recording. The good thing is that the supply and demand strategy works on both ranging market and trending markets. I personally prefer trending markets, and of course, I will show you why later, but the main reason is because you can use Fibonacci's together with your supply and demand areas. At the moment, so just to understand how the market is moving, in this case, we have a high right here. So we have a high, a low, in this case, a lower high, lower low right here, well, all the way down. Actually, if we want to actually see all of them, we have a lower low right here, lower high again, lower low, lower high, lower low, and finally here is starting to range, because here it is just like the example. Amazing, I didn't even prepare this example before starting, but it is really the same. Right here we are inside this channel, I mean this triangle pattern, and as we can see, it is really the same. This doesn't mean that we are going to turn bullish and we will start a bullish market or a bullish phase, but there is a possibility. This was just to show you how the market moves, how to identify if it is bullish, if it is bearish, and how to identify higher highs and higher lows. If you are really dedicated to understanding the chart, to making money with trading, you will need to do this on your chart. Of course, when I send my analysis, I don't put the letters and everything, but for you, it is a good thing to do this. So before starting, just understand market structure. Actually go to TradingView and write down, just like I did, the highs, the lows, and if you have higher highs or lower highs. In this case, since it is bearish, you have lower highs, lower lows, lower highs, lower lows. If it was bullish, it was the opposite. But please do it. Do it every time you open the chart before starting to analyze. This is the first thing you want to do. After, well, let's continue with the example. So you actually had, of course, the market phases. We talked about this already. So you have bullish trend, higher highs, higher lows, bearish trend, lower lows, lower highs. And if we are in a range, sideways market, choppy market, whatever you want to call it, we are just going sideways inside a support and a resistance. As I said already, the good thing is that the strategy works for both of these markets, but if you want to choose, this one is actually the best one. I mean, not this one, but if we are trending, so either to the upside or downside, that's the best. Of course, if you see a good opportunity in a range, that's fine, you can still enter. Right, this was another example of charts, even though my example was just made on a chart live. But in this case, we have a bullish market. So you can see higher high, higher high here, higher low, higher high, higher low, higher high, higher low, and so on. So this is a bullish market. And of course, I can see already some good supply and demand areas. And I will teach you in a second how to see them. Just showing you that in a second, I'm just recognizing some good entry points that are not common to just support and resistance areas. This is not the same. What most people mistake is that supply and demand areas are the same as support and resistance. Sometimes they are, don't get me wrong, sometimes they are, but not necessarily. So everybody knows about support and resistance, but in a minute I will show you why if you are trading with support and resistance, you will not be as successful as trading with supply and demand. Like maybe last month I put a post on my Instagram about supply and demand, and this guy started commenting that supply and demand is just to scam people because it is just the same as support and resistance. I tried to explain that sometimes it is the same, not always. I mean, most of the times it is actually not. But I mean, he was just convinced about his opinion, and that's fine. I just want you to understand that if you look at this chart right here, you can see that here I don't have any reason for, well, here, yes, this one could look like a previous resistance. But in this case, here I don't have any reason for plotting my demand area here. Just keep in mind that if it is a demand area, if we're looking to buy, so if it is acting as support, it is a demand area. And if you're looking to sell, it is a resistance area. It is not really resistance, but it is just to make you understand. Demand is for buys, supply is for sales, because at demand, there is more demand for that particular thing, whether it is Forex, whether it is a stock, an apple, an orange, whatever, there is more demand. If there is more demand, price goes up. And we're selling at supply because the price is overbought, and actually people don't want that thing anymore if the price is so high and they're selling it, and therefore price goes down. So the reason why it is not the same as support and resistance is because you can see that from here there wasn't any reason to draw a support. Maybe your support was going to be here, but not here. And that's why later we will understand why supply and demand it is best. So this was just to give you an example. Let's continue with market structure. And I wanted to just do a little parenthesis on support and resistance in this case. In this case, it is a ranging market. And the reason why it doesn't work as good as supply and demand is because you get these fake outs. You see, this is where banks actually fake you out. They collect money from losing traders, and then they move on and finally get their liquidity and close the trade in profit. Okay, now I did the whole introduction about supply and demand, what it is, why it works, and actually give you some explanations about the candlestick patterns and the market phases and the market structure. Before moving on to actually supply and demand, which is this folder right here, and of course keep in mind that I will show you some examples which are pictures. I mean, they are pictures from my own charts, they're not random pictures. So I did that analysis, I found those supply and demand areas, but I wanted to take the picture in order to show you the best way to use supply and demand. Of course, later I will improvise and I will go to some random charts and show you some supply and demand areas so you can understand while I'm doing it how to do it. But before that, I wanted to show you just the pictures which are perfect already. That's the reason why I took the pictures. Before continuing, I wanted to ask you, since we are about 45 minutes in the webinar, I wanted to ask you if you have any questions about what we covered so far, even if it is about most of the basics. If you have any questions about supply and demand, what it is again, if you have any doubts, if you want to ask me something about the candlesticks or the market structure, just tell me here in the chat, please. A second. Okay, just ask me in the chat, or if you don't have any doubt, then just tell me that everything is fine. All good, right? When do I exactly know that you take a trade? Well, later I will show you the exact supply and demand strategy and when to take a trade. Right now, I just told you something about the basics and something that you need to know before proceeding to the actual strategy. So later you will see where to enter and how to enter. Actually, we show you also where to place stop loss, where to place take profit. Just waiting for some more messages. If we are fine, I will continue. All right. Yeah. So I believe we are good with everything we covered so far. Right now, we will dive into the actual supply and demand strategy. So let me delete this one. So first of all, you have to write down one rule about supply and demand. The first rule is that we are never ever going to trade against the trend. So if we are bearish and therefore we are making lower lows and lower highs, then we are only and only looking for sells. Otherwise, if we are bullish and we are making higher highs and higher lows and we're going to the upside, we are only looking for buys. We are not going to trade against the trend ever. So this is the first rule about the supply and demand strategy. How it works. So now we are understanding how it works. First of all, in order to recognize a supply and demand area, you will need to actually exercise your eyes in order to see it. The more you practice, the more you will see it faster. In order to recognize it, first rule is that you need to look for big candles, big candles, which are big liquidity, big volumes, like this one right here, this big red candle. Just to let you know, the supply and demand strategy works on any time frame, any time frame. I just prefer to use the 4 hours and then move to the 1 hour in order to get my entry. But I look for supply and demand areas mostly on the 4 hours. So your choice if you want to use it on the 30 minutes or whatever. I'm just telling you what I'm doing. I also used it in other time frames, but I prefer this one. So as I was saying, supply and demand. How do you recognize a supply or demand area? You need to look for these big candles. So this is the first one. Let's just wait. Let's just mark it. First one. Then let's see. Here are all small candles. Here there is another big one, but in this case, well, in this case we are in a downtrend, so we will not look for buys, but okay. Demand. Here, let's see. Big candles. There are no actually big candles. Here, choppy market just going sideways. Here we have a big bullish candle. Here another one. So big drop to the downside. Here in general, just big drop to the downside. Here the same big push to the upside. Also this big candle. These are all very good supply and demand areas. Also this one right here, big push to the downside, big candles. So in this case, we are understanding where there is liquidity in the market, where there are the big moves. These big moves to the downside or to the upside usually happen because they are caused by a bank or a financial institution. you see a big candle because there is a big volume. When a bank is entering a trade, they are probably entering with millions. I mean, they're entering with a lot of money, and therefore you see a very big move in a very short time. They actually move the market. And that's why sometimes you get a fake out, you get your trade at stop loss, and then we move to profit because they try with very quick moves, very big moves to stop you out and then go in the right direction. In this case, we are first waiting to identify the big moves. So we see that here we have a big move. Here we have the others later that we just marked. And in this case, we are understanding that a bank entered right here. And we are able to identify our supply or demand area. In this case, it is demand because we're going to the upside. It means that they are buying a lot from here. In a minute, I will show you how to actually draw the supply and demand area. After we understood that we are going to the upside, that the bank entered with a lot of money, we are waiting for the price to come back to that area, because how are banks working? They are banks, or in general financial institutions. So we get a nice demand, big push to the upside, and then as you can see, I didn't even know, these are live examples. We came back to that area and we actually started going again to the upside. The reason why is because when we identify a supply or demand, the banks in general, I mean the same bank that entered that trade, they didn't enter with 100% of the money that they wanted to use. Like, this is natural. Like, they don't go, if they want to risk, I don't know, 1 million in one trade, they will not go in with the whole 1 million the first time. So maybe they will put half of that money the first time, and when the price comes back to that area, they enter with the remaining half. And the same is for other financial institutions. They see that a bank entered with big volumes, big money at the current zone, and for that reason, later, when the price comes back to the same zone, the same bank and also other banks are jumping in, and therefore they're looking to make some money. In this case, then we have our demand here. As you can see, price came back to the same price area and then started going to the upside again. Let's see. In this case, this was a demand, but in a downtrend, we are not looking for buys, so we don't care about this demand. But we had this huge candle right here, this huge bearish candle, and therefore we have a supply from here. And this is why it is so different from support and resistance, because if you were going to draw your support and resistance, you were going to do this, right? Resistance, resistance, and so on, and maybe this one support. But you are not going to take into consideration this area right here, where you had this huge push to the downside. And that's why you have your supply area from here. Supply area, as you can see, was already tested again with a big push to the downside. If you had this entry from 65 to actually 62.90, these were 210 pips with just this entry. Just to make you understand how powerful supply and demand areas are and why they are much better than support and resistance. Of course, I know that I haven't explained yet how to draw them, but I'm just training your eyes to understand the big moves, how to see them, and why it is a supply or demand. Later, I will show you exactly step by step how to draw your supply or demand areas. Right now, let's go back to my pictures so I can show you some examples that are actually from my own charts. So let's open. Okay, so this is the first example. Let me see the chat. Someone wrote in the chat. Do I always wait for a pullback to the supply or demand area? Well, if we don't reach the supply or demand area, we will not enter the trade, because you identify that supply or demand after you get that big push to one side, either upside or downside. So you identify the push and then you wait for the price to come back to that area. If the price doesn't come back, you will not have a trade. So in this case, you have this supply. This is ADUSD 4 hours chart. You have this supply and this demand. This supply is very easy to identify because you are used to trade support and resistance, and this supply, it is exactly the same as a resistance area, very easy to identify, same as a resistance. Like everything you have studied about Forex already, you can identify this resistance very easily, which is actually a supply. You had this big red candle to the downside, and therefore there is big liquidity in this area. Price actually comes back, as you can see, and you get a nice trade. These are about, let me see, about 70 pips. Not bad. But for this demand area, I'm sure that you are not going to recognize this demand area. You are going to put your let me see if I can draw something. No. Oh well. You are going to draw, sorry, I'm not very used to paint. Well, you are going to draw your support or demand from here, from the bottom here, and you are going to wait for your retracement to that area. But actually what happened was that we had this nice big bullish candle after forming our base, and we will see what a base is in a second when I will tell you all the details about the strategy. And you can actually see that we came back 2 times, first time and actually second time, to enter a trade. So you could have entered with many positions in between these supply or demand areas. Now, next example about supply and demand. In this case, NZD JPY. So you have your supply, and as you know, very easy to identify, very easy as it is similar to a resistance. Same thing for the demand, even if I'm sure that you would have put it a little bit lower because we didn't go so far down as we would have with a resistance, because the resistance was going to be all the way down here. So maybe you could have missed your entry. Supply demand areas are so good because you're not going to miss your entries and you have a defined strategy to use. And here you have your supply. And this one is also different from a resistance area, because you are going to put your resistance area all the way from up here and then, oh, perfect, all the way from here to here. And this is actually the upper side of our supply. And as you can see, we never reached this area to enter at this resistance, but we only reached as our supply actually 2 times, and we went both times to profit. Here, same for the demand. Maybe your resistance was going to be from here, or maybe a little bit more up, but you could have missed your entry. So as you can see, this is our demand, big push to the upside. It is all about understanding the big pushes of the market and then being able to draw the demand correctly in the chart. But right now I'm training you to see the big pushes like this one, and also this one isn't bad. And later, in a minute, I will show you how to draw it correctly, so you are also able to draw your supply and demand areas. So as I was saying, you're not going to miss your entries because In this case, your entry was not going to be reached. And this is why also for me in the past, before understanding how to be profitable, before understanding how supply and demand worked, I was thinking that the market was going just crazy. I didn't see the price. I didn't see the price reaching my entry levels, and I was saying, "Man, why it is stopping before my resistance? Like it doesn't make sense that it starts going up or down before reaching my entry point. Why is it moving from there? There is nothing there. There is no trend line. There is no Fibonacci. There is no resistance or support area. Why is it is moving? The reason why is because we had supply and demand areas, but I just didn't know about it. Let's move on to another one. Here, this is the first example where we have a demand area. This is a demand area that it is totally different from a support area. As you can see, huge push to the upside. Our base is here, and we have our demand. This is just, this is just how supply and demand are working. And in this case, maybe we were going to put our resistance our support, from here, but we never reached this area. We actually have our demand, huge push to the upside, big banks going all in market. I mean, they're not going all in, but they're going in, and finally retracement, and then continuation to the upside. Of course, by this time, we are already in profit with stop loss at entry, and we're waiting for the target. The target could be this one, because this is another supply. You see big, big drop to the downside with a big red candle. So this is a supply, and maybe we could stop our trade at this level. Or if we want to be more patient and maybe also more risky because we're not sure that we're going to reach our target, maybe we could wait for this one. But as you can see, we just identified another supply area here. I know that in a minute I will show you how to draw it and everything will make sense, but you are already seeing why supply and demand are so powerful. Also, the reason why I did an explanation in the beginning about candlesticks is because if and only if you want to wait for confirmation, you have two options: either enter right away at the supply or demand without waiting for a confirmation, and therefore it is more risky but better risk to reward ratio, or you can wait for the confirmation. And I showed you candlestick patterns only if you want to wait for confirmations. In this case, what you have here, you have a nice pin bar, which is my favorite, and if you enter after the pin bar, we are already in profit, as you can see. So let's move on. Here, GBP, JPY, first example of a demand area together with Fibonacci's. Just trust me. In a minute, I will show you how to draw the supply and demand areas, and later I will show you how to combine it with the Fibonacci's, and everything will make sense. So in this case, we have big push to the upside here again with this huge bullish candle. Banks are entering the market. Therefore, we identify our base, which is here, and we put down our demand area. Once we reach this area, we are entering the market. We are entering a trade. This is good because also we have our Fibonacci levels as confirmation. If you haven't put the Fibonacci levels the same as mine, just do it. And they are 0.38, 0.62, 0.705, and 0.79. And the reason, and I'm entering trades only in between these three levels right here. So in between these three levels, I'm entering the trades. And in order to decide actually where to enter, I use supply and demand areas. So we have our demand area corresponds to a level in between the 0.705 Fibonacci level and the 0.79 Fibonacci level, and I'm waiting to enter in between these two levels or buy. Of course, I did the disclaimer that we need risk management, we need a good risk to reward, because even if we have all of the confirmations, we are not going to be 100%. Sometimes we're going to lose, but I'm sure that most of the times we're going to win. Okay, so this was the first example with the Fibonacci's. All right, so another example, Euro JPY, and how, wait, we have something in the chat going on. Why do you draw your Fibonacci levels at the end of the body and not, oh, right. Well, I was going to explain my Fibonacci strategy in a minute, but you just need to use the three levels that I use, these three levels. And also another very important thing that you need to keep in mind is that we're not drawing the Fibonacci levels from the wicks, but we are drawing the Fibonacci levels from the body. So this is a wick. If you don't know, this is a wick, and this is a body. We're drawing the Fibonacci levels from the body. This is about my Fibonacci strategy. Drawing from the body, in an uptrend from the bottom to the top, in a downtrend, vice versa, from the top to the bottom, and entering in between these three levels. And then we combine everything with supply and demand areas. Are supply and demand areas the same as order blocks? Yeah, kinda, because there are a lot of orders stacked in that area, but I studied a lot and it is working for me, supply and demand. I don't know if it has a different name called order blocks or not. So I'm not, maybe I studied it in my language, so in Italian, but yeah, just supply and demand. So I was saying that we were going to move on to another example, which is Euro JPY. And after Euro JPY, I will answer some more questions before continuing. Hold on, wait. Right, in this case, 4 hours, Euro JPY. We see a big push to the upside, but we don't actually have a base. And we don't understand where should I draw my supply or demand area, in this case, demand, because we see the big push to the upside, but we don't see the base. The base is usually a candle in a different color. So in this case, we are bullish, so big push to the upside. We are expecting to see here a candle in red, so a bearish candle, just small bearish candle here. But we don't have it. Same if we are bearish, like here that, here, perfect example here. Big push to the downside, but this is our base. The basing candle, it is this one, right? It is the green one. It is the basing candle. In this case, we don't have the red one here to draw our supply and demand. And that's why earlier I said that I use the 4 hours, but then I moved to the 1 hour for my entries, because in this case, on Euro JPY, I moved to the 1 hour, and we can see finally the red candle, which is the basing candle, before having the explosion to the upside. And therefore, I put my my demand area even more precisely. And finally, we saw that we came back here and actually went to the upside again, about 60 pips in profit. Our stop loss would have been already at entry. Right now, we're pulling back down. Maybe we have another rejection. Right. So before continuing, I showed you 6 examples. Right now we have 5 more before going to the charts where I show you exactly how to draw it. Before continuing, just want to answer some of your questions. If you have any, just write it in the chat. Do I use cut data? I don't. I mean, I know how to use it, I just don't use it. Any other question? Or if you're fine, just tell me, I will continue. So basically, when the base is not seeing, you go to a lower time frame. So first of all, most important thing is that there has to be a big push either to the upside or downside. Then, if you're not able to identify the base, you drop down to the 1 hour, to the lower time frame. Or, well, this is one possibility. Or even if you're able to see the basing candle on the 4 hours, anyway, you still drop down to the 1 hour and you check for a more precise supply or demand area. This is just to have it more precise. Maybe it changes, but just 5 pips, not much, but still it is more precise. So that's the main point. Can you do it on a 1 hour chart and then look for entries on the 30 minutes or 15 minutes? Yes, you can. Works on any time frame. If you want to do it on the daily, do it on the daily. If you want to do it on the 4 hours and then drop to the 1 hour, just like me, fine. If you want to do it on the 1 hour and then drop to the 30 minutes, yes, works. Just use the rules that we said. Big moves, basing candle, never go against the trend, and then later I have to show you how to draw it correctly, and also the 3 rules that you always have to respect in order to have a high accuracy. But you can do it on any time frame. How many candles do you consider the base area or the accumulation area? I mean, can be only one. Can be only one on the 4 hours, which means that there are 3 or 4 candles in the 4 hours. So on the 4 hours can be only one, as long as there is a big push either to the upside or downside right after, can be only one. Do you time scaling from 4 hours to 1 hour? Do you use same supply and demand, or do you change it in lower time frame? So when I go from the 4 hours to 1 hour, I just do it to get my perfect entry. I don't do it to change completely my supply or demand area. So I start from the 4 hours, identify what's going on, identify the supply or demand, and then I go to the 1 hour in order to just adjust it a little bit, maybe just 5 pips and 5 pips in the other direction in order to have a more precise area in which I can enter. That's it. But it is the same as the 4 hours, just more precise. Market always goes back down to the beginning of the big push. No, it doesn't always come back down to the beginning of the big push. But if it continues, then we will not enter a trade. If it doesn't come back, we don't enter the trade. If it does come back, then we do enter the trade. So that's the main point. You identify your supply or demand, and then if the market comes back, then that's really good, we enter. If the market doesn't come back, that's fine, we move to another chart, we move to other opportunities, that's fine. Is this question about how I put my stop loss? How do I, okay, then my stop loss, later after I have to show you how to put this, how to actually draw the supply and demand areas, and also how to use your target, so take profit, and your stop loss. So just 1 minute and we will talk about it. How do I handle fundamentals? Well, before the week, I check the economic calendar in order to be ready for high impact news, and I avoid trading during those news. But I mean, there are only few news that are really important, like NFP is really to avoid. You have to avoid completely NFP, which is, if I remember well, the first Friday of every month. But then, of course, there are going to be some news that you cannot predict. Of course, there are going to be news that you cannot predict. Like 2 weeks ago, nobody knew that Pfizer was going to say that they found vaccine, and therefore we had a very rough day because the market was just going crazy. I mean, this is the biggest news of the year. I mean, everybody was going crazy because of coronavirus. Pfizer wakes up one day, they say that they found the vaccine, was unpredictable that they were going to say it that day at that time. And if you have any trade, maybe you're going to hit your stop loss, or maybe you're going to make crazy profits. But usually with big volatility, maybe you get some big spikes and you hit your stop loss. And that's why, even if you have a really good strategy that works a lot, that's why you need to always use risk management and just manage your risk, manage your account. Any other question? Or I will wait. If you don't see base in the 4 hour, do I go to the 1 hour to see a clear base? As I said, if I see a big push in the 4 hours, a big candle, either bullish or bearish, then I start looking at the base. If I cannot identify any base on the 4 hours, even if I usually see it on the 4 hours, if I cannot, just like in the example that I showed you on Paint about EuroJPY, if I cannot identify the base in the 4 hours, then yes, I go to the 1 hour and I check for the base. If I don't see a clear base, I don't look to enter the trade. If I don't see a clear base on the 1 hour either, I don't look to enter the trade. What type of trading do you prefer to use this method? Does it also work as good on the 5 minutes for scalping, or do I prefer swing trading for this method? Okay, so I don't like swing trading. I don't like, because swing trading is about holding a trade for, I don't know, 5 days, 1 week, a month, or just a long time. I don't really like holding for weeks or months. I prefer best intraday trading. And I prefer intraday trading because I hold my trade for 1 day, maybe 2 days. Sometimes if the market is very slow, 3 days, but usually, like most of the times, it's just 1 day. And I prefer it because it works best for me. Of course, I'm not saying that it works best for everybody to be an intraday trader. This strategy is designed to work for every single type of trading, whether it is scalping, whether it is intraday or swing trading. It works with everything. Of course, it needs to be adjusted. So if it is for scalping, you need to go on the daily or maybe even weekly, enter the trades and hold for a very long time. If it is for intraday trading, you do it just like me, just how I'm showing you right now, 4 hours, and then you drop down to the 1 hour in order to get the correct entry, and that's good. You are doing intraday trading, and most likely you're going to enter the trade and close it on the same day or maximum in 2 or 3 days. For scalping, if some of you don't know it, I have an intraday account and a scalping account. On my scalping account, I use my Fibonacci strategy, which is about recognizing the trend, putting down my Fibonacci's from the body, as I showed you earlier, and entering in between the 3 levels that I just showed you earlier. But then, of course, I combine that strategy with supply and demand, and I do it on the 15 minutes, and it works for scalping. So yes, it can be used for scalping too. Just you need to just adapt the way you're using it. Is it possible to have the base as a doji? Yes. Is this concept same with smart money, institutional trading? Are you teaching us sniper entries? Yeah, well, this is about institutional trading. I mean, the when I started this webinar, I said that this is the way banks and big institutions are trading, and what we want to do is to follow the patterns that are trading. Of course, we're not going to win every trade every time, and that's why we need risk management. Nobody wins every time. Like, please don't expect to finish this lesson and go on the charts on Monday and enter with half of your capital and maybe you lose. It is because, of course, if you combine this strategy with a good risk to reward ratio and risk management, then yes, you're going to make money. And sniper entries, I mean, yes, if you use this strategy, maybe you either have two options. The trade either goes to stop loss or it goes to profit because you are entering at some very strong areas. So it either goes after some minutes to take profit or it goes to stop loss. I tried backtesting your scalping strategy and it works, but I don't find many trade opportunities on 15 minutes time frame. Well, I know it works. Otherwise, I wouldn't teach it. But thank you. And on the 15 minutes, well, if you want, you can just text me. I will help you find more opportunities. Of course, please, please don't have the urge of trading a lot, because if you need to enter a lot of trades in one day, that's a problem. That's like gambling. If you need to gamble, you have to go to the casino. But if you can make a lot of money with just one trade per day, two trades per day. So I'm sure that by looking at the 15 minutes, and maybe you look at Euro USD, GP USD, GP JPY, just by looking at three pairs, you will find at least one or two opportunities per day. Of course, then you can start looking for gold, for some others, and I'm sure that you will find more than that, more than two trade opportunities on the 15 minutes, because on the 15 minutes you see a lot of opportunities. But please don't have the necessity to enter a lot of trades. You backtest it on the daily chart. Wait, can I backtest your strategy on the daily chart? Because I have to pay for intraday. Oh, go to, let me write it for all of you, forextribe.com. This is a free website for backtesting on any time frame. So if you don't want to pay for TradingView, you can go on this website and it is free to backtest your strategy on any time frame. Of course, you can stay here on TradingView and backtest it on the daily, but if you are backtesting on the daily, then you are using it for swing trading. Yeah, with candlestick reproduction, like TradingView, yes. You go back in time, and then you click to continue, and yeah, just like the replay function on TradingView, the same. Any other question before continuing? Well, if you have questions about my scalping strategy because you took my course, then DM me on Telegram, because this webinar is about the supply and demand strategy. So just text me on Telegram and I will answer you. Okay. Any other question, or I will continue? Let's go. Let's go. Continue. So we were here. Let's continue with pictures. This is GBP, GPY. I think I showed you earlier already some pictures about GBP, GPY. Clear, strong move to the upside, huge candle. Therefore, this became our demand zone. As you can see, we have the basing candle, which is this red one right here. We are on the 4 hours, and we are waiting for this retracement before entering. We are not entering any trade before that. And of course, our target could be all the way up here. So this is another example of a nice push to the upside, basing candle right here, demand area, and we are waiting. Of course, if we are putting down our Fibonacci's from here to the top, I'm sure that this area corresponds to our Fibonacci levels. Sorry. Let's continue. Don't want to waste too much time. All right, so this is a common analysis that you would do if you were trading just support and resistance areas. In this case, you can see that, of course, this is a resistance. This is support, which here became a resistance. And here, again, you have a support. And here, you finally see a retracement, but you're not able to catch any trade because you see that here it is stopping. It is not arriving to your entry levels, which is your support, which here becomes resistance, and then it continues to the downside. And then this is only if you reason with support and resistance. But what happens when you start understanding how supply and demand works? This was actually the supply area. You can see a big drop to the downside, basing candle right here, the green one, and we have our supply area. As you can see, price came back perfectly to touch the supply area, and we went to profit. These are 170 pips, so it was a very nice trade. And then we came back up again. Came back up again. Let me see if I took the screenshot also of that. Yes, we came back up again, and as you can see, this is another big push to the downside after rejecting the first supply area. This is another big push to the downside, big candles, retracement here, already the opportunity right here to enter another trade, continuation to the downside, very good trade also in this case. We came back one more time right here, rejection again of this supply area, and big continuation to the downside. Actually, let me see how many pips. 250 pips almost. So these are very good. Also here you can see another rejection of our supply. But well, if you give me a minute, I will give you the rules on where to enter. Of course, these are all very good trades except the last one, and I will tell you why later. So someone is asking the dimension of the rectangle that I'm drawing in order to identify the zone, why it is so, like, how do I decide how big it is? I decide to draw it, the size depends on the basing candle. But in a minute, I will show you how to draw the supply and demand areas after we are finishing with these pictures. I just have the last one. Well, the last one is for later. So let's move on to how to draw them, how to draw supply and demand areas. So here we identify, please always remember, never go against the trend and identify the big moves. You finally see a big move right here, and then you have to identify the basing candle. The basing candle is the candle that happened like the previous candle before that big drop or big push. So the previous candle is the basing candle. And in this case, it is this one. This green candle is the basing candle for the big drop. In this case, supply and demand areas are formed by two lines. And in between those two lines, you have your supply or demand. In this case, here is supply. And the two lines are formed by putting them from the bottom to the top of the basing candle. And as you can see, this green one is the basing candle. You put your lines from the bottom to the top, and you have your supply area right here. Does that include the wick or just body? Including the wick. Including the wick, as you can see here, it includes the wick. Of course, as I was saying, always drop down to the lower time frame, just one lower time frame. So if you start from the 4 hours, you drop to the 1 hour in order to get a more precise supply area. So in this case, you can see that you have your basing candle here, which is the green candle before the big push. And so you get a better and more precise supply area. Now, this is how to draw it. Let me just find some other examples so you can get used to drawing your supply and demand areas. Here, another nice one. You can see that here you have some big, very big candles. You can also see that price came back to retest that area, and we actually had a nice profitable trade. The reason why is because down here we had this huge push to the upside. Which one is the basing candle? The basing candle is the red candle right here before the huge push to the upside. We put our demand zone from the bottom to the top, including the wick of that red candle, which is the basing candle. Price goes up. Well, price went up already because you had the big push. You are waiting for the retracement. Retracement comes. Finally, we continue to the upside. Trend is bearish. I mean, no, here it is ranging. Here we're ranging. Here it is bearish. Here it is bullish. Here we are ranging. We are going up and down. So this was just an example. As I said, this strategy works on all market phases, whether it is trending up or down or ranging sideways. We also want to enter only buys on bullish markets, bullish trends, only sells on bearish markets. But when it is ranging, you just have to identify a good supply or demand area, and you're fine. So this was an example for how to draw it. Let's check some other examples. Well, here we have another one, but let's go back. Right. So here, big push to the downside, right? Huge push to the downside, which is the basing candle. The basing candle is the green candle before the big drop. Therefore, from the top, right, to the bottom of that candle, let me just put the lines so we can extend them here to the bottom of the basing candle, which is this green candle before the huge drop. Market comes back to test this area here again. As you can see, profit, again, second time profit. Well, here we actually tested it again and again, and we went down again. So These are just random examples that I didn't prepare any of these examples. I'm just trying to identify some big pushes, identifying the basic candle, and then it turns out to be in profits. When I look at charts now, I see 100 of supply and demand zones. Well, try to identify the best ones. Start from the 4 hours and just look at huge pushes. I mean, very big pushes, like this one. This one, it is a very good supply area because we have a big push to the downside, big candles. Like here, you can see these are all also big candles, so that can be a nice demand area. Here we don't have any supply or demand, or we only have small candles. Same here, we don't have any supply and demand because these are all small candles. But guess what? Which is, out of these, which is the biggest candle? It is this one, right? Do you spot any bigger candle compared to this one? Close to here? I don't. And which is the basic candle? This green one is the basic candle. We put down top from the basic candle, the bottom, and guess what? We come back to retest. Wait, wasn't correct. Right, this is the basic candle, big push to the downside, big candle, come back to retest the area, big push to the downside. I mean, from here to the bottom, let me see how many pips they are. They are 365 pips. So this is a very powerful strategy, as you can see. Right now, I'm just teaching you. Earlier, I showed you how to identify them. So identify the direction of the market, lower time frame, market structure. Later, I showed you what you should look for, so the big pushes of the market. And I also showed you where here right now, where is the big push? Because as you can see, these are all small candles except for this one. So this is a very nice push to the downside. And right now I'm showing you how to actually draw the supply or demand area. So you have to identify the basic candle. And by identifying that basic candle, you have a supply or demand area. And you are entering the trade. And so far, we only saw very nice trades. Of course, you can have some losses. I mean, don't just think that we are only going to win every time. So far, I think I showed you 5 or 6 examples, and all of the trades were profits. But you have to keep a good risk management because, for example, here you get a nice base with a big push to the downside, basic candle, but guess what? Market comes back and you hit your stop loss. So I'm just telling you that this strategy works a lot, works very good, works most of the times. But if you're going to go all in a trade, and this is the trade where you go all in, then don't come to me saying that you burned your account, because you have to keep a good risk management. Impulsive pushes, right? Let's see. Well, of course, here there is a big candle, but never came back later to that candle. So here all small candles. Well, let's move on to another GPGPY. GPGPY, I hope that you can see a big candle already. Explain the freshness? Yes, in a minute I will. How do you actually set take profit targets? In a minute I will explain everything. So just to give you another example before continuing to the rules, I want to do another example. Here, where there is the big push, of course, here, the basic candle, the green candle. Easy, right? Put down from the top and the bottom of the basic candle. Guess what? Price comes back. First successful trade. Price always almost comes back again, and then again goes to the downside. And here we don't enter the trade. And you say right now, okay, it is easy. Of course, you see already that you hit your stop loss if you enter the trade. So it is too easy to say that you will not enter the trade. But no, because in a minute I will tell you the rules that you need to have, and you will understand why we wouldn't have taken this trade. So 2 successful trades already. So, okay. Any question about how to draw supply and demand areas? After that, I will continue to some more explanation and to the rules that we need to have. When do you refer to price come back to supply and demand area? Does it also happen in a short period, or could it happen in weeks? I mean, it happens if you trade on the 4 hours, it happens in some days. But the thing is that you're not going to, when you're doing your analysis, you're not going to be exactly here. So if you do your analysis on weekend, it's not like the price is going to be here, right here. Probably something already happened. We are already retracing back. And since you see that we are already retracing back, you say, okay, we are bearish, we're going to the downside. I see that we are retracing. So I'm thinking about entering a trade. Where should I enter the trade? I don't know where should I enter. So I start looking for some supply or demand areas. In this case, supply, because I'm looking for a sell. Since we are bearish, identify it, and then we enter the trade. Of course, maybe you have to wait 1 day or 2, but it is not about weeks or about months. Don't worry. There is another area on 21st. Should you mark that? 21st. Oh, here. Oh, yes, that's a nice area actually. But as you can see, in this case, this could have been a loss. This was going to be a loss right here. Basic candle and push to the upside, loss. So far, I showed you, I don't know, 8 examples or maybe even more. And there was 1 loss. This is the second loss, and the rest were all profits. So if you stick to the rules, you identify supply and demand areas, big pushes, and then you use correct risk management. Of course, you're not going to win 10 trades out of 10, but you're going to win most of them. Can it be used on gold? Yes, can be used on gold. It is really good on gold. And if you combine it with Fibonacci levels, it is even better. And I will show you at the end how to use it with Fibonacci's. This is not that hard. Correct. The loss doesn't correspond to Fibonacci levels also. Yeah. And that's why sometimes I say to use confluence. Right now, I'm showing you how to use the Fibonacci strategy by itself, like without anything else. You just use supply and demand areas, and you are still making profit without anything else. So, of course, if you start combining it with something else, your accuracy will be even better. When I take a loss on my supply level, can I use it as a demand level? No. And I will tell you why right now. I don't use support and resistance anymore. No, just supply and demand. And sometimes the supply or demand corresponds to the support and resistance, as I showed you earlier. Sometimes they do correspond, but I don't use support and resistance. Sometimes I know when I make video analysis, I say this support, this resistance, but it is because the supply or demand corresponds to a support or resistance. So this is a nice question. When I take a loss on my supply level, can I use it as a demand later? No. So in this case, this is a very nice supply level which turns into a demand, but this is just a coincidence. Usually it doesn't work like that. Usually what happens, and the reason why retail traders are losing money, is because they see a breakout of resistance, they wait for the retest, they enter right here, and they enter a buy. In this case, it worked perfectly, but this is just a coincidence. Usually what happens, and the reason why most traders lose, as you know, most traders are losing money, so don't tell me that everybody is using this break and retest and that everybody is making money, because this is what everybody uses. And as we know, not everybody is making money. So what usually happens is that we get a breakout, retail traders see the retest and they say, okay, I'm going to enter from here a buy. Nice buy from here. And guess what happens usually? We actually have our demand right here. You see? Big push to the upside, basing candle, and we should wait for that demand to be met in order to continue in this case. That's why usually you see the price push to the downside, push below what most traders think it is support, which before was resistance. I know sometimes I say it too, but I don't want to give out too many informations, for example, on my free channel about exactly how I use supply and demand. I mean, it is not for everybody. You paid for this lesson, so it is not fair that I teach it on my analysis on the free channel. I just show the analysis. Sometimes I call it support, sometimes resistance, but this is actually how it works. So you get the breakout, it is coming back for the retest, and everybody is entering here because it is the perfect retest. But then usually, most of the times, what happens is that it goes below that retest, comes actually to a level which nobody understands, and then yes, then it goes up. Nobody understands why they're getting stopped out. Everybody blames financial institutions, and they're right. It is because of financial institutions, and then the trades go to profit. But it is too late because they already hit stop loss. So that's why you don't use your supply when you get the breakout. You don't use it as demand. You wait for the actual demand, which is down here, to enter then a trade. But this is just a coincidence that it corresponds. Make sense? About to continue in a minute, just 30 seconds. I will continue with the lesson. All clear. All right. All right. So wait. Right, let's go. Let's continue. So I wanted to do a quick explanation about the different type of bases, different type of supply and demand levels that you can have. You have 4 options usually. So you have the first option, which is the rally base. So you create a base, and that base is created and it becomes a supply because you get a big push to the downside. So big candles. This becomes a supply, and then you finally get, give me a second, where just need to find here. then comes back, continues. So here you have, this is the rally base drop path supply, let's call it like this, supply pattern. It is not really a pattern, but this is called the rally base drop. And then after this happens, if there is the impulsive move here, you look for the retest and continuation to the downside. Then you have the drop base rally. And of course, to become a demand, this needs to be a big push, impulsive move. And then finally, you have your retracement continuation. And finally, your very successful trade. Then the third option is the drop base drop, and you wait for your, this has to be of course the big push. You wait for your retracement to the supply and you enter your trade. Then you have finally the last option, which is the push base push. Wait for the retracement and enter the trade. So these are the four options for supply and demand areas, actually, right here. These are the four options, and you look to trade these. Of course, all of these are really good. I prefer, personally, these two, the drop base drop or rally base rally. The reason why is because these, you can combine them with Fibonacci levels. Okay, so I'm about, wait, let's see a question. Yeah, both on top will be on ranging markets. Yes, most likely. If you're not looking for reversals, but I said don't look for reversals in order to have a higher accuracy, just follow the trend, then yes, this is for ranging markets. These two are for trending. So I was saying, okay, let's give you the 3 rules that you need to always keep in mind. Just remember that the first 2 rules are the most important ones, and then the last rule, it depends. I mean, it is not as important, but just keep them in mind. So the first rule is the strength of the move, and we talked about it all the time, all this lesson, we talked about the strength of the move. The move has to be very strong, very big, and very quick in order to be considered a good supply or demand area. Because if it is not, if it is formed by small candles, then it cannot be considered as a good supply or demand. It means that the banks are not entering in the market, the financial institutions are not entering. We don't want to trade that. We want to trade areas where we know that the banks, the financial institutions entered with a lot of money, where we know that if the price comes back, probably we will get good profits because there is high liquidity in that area. First rule. Second, well, just the previous rule was, of course, to follow the trend, but I already said that. Now I'm giving the next 3 rules. So the strength of the move, first rule. Second rule, we never talked about it, is the freshness of the zone. And you need to apply this rule. This rule is very important, and let me show you why. Here, this should be the right example of why it is so important. There you go, you have the freshness of the zone. So if you want to trade a supply or demand area, the zone needs to be fresh. When I say needs to be fresh, it means that, of course, here you are identifying the push to the downside, big push, big candles. Therefore, you say, okay, this is a supply area. I'm waiting for my retracement. You're waiting for your retracement, and you get it right here. Here, the zone is fresh because it is the first time that we are coming back to that zone, and therefore you want to enter here. It is a good trade to enter at the current level. And of course, we're getting profits. Comes back a second time, and again, yes, it is an okay entry. This is the best one. I personally prefer to trade the first one. At the second time, the zone is less fresh, and that's why it is very important to keep in mind the freshness of the zone. It is less fresh, but it is still fine. So you can decide how much you're willing to risk in this trade. You say, okay, it is not the first time that we're coming. The zone isn't so fresh, so maybe I just don't enter. I usually do this. I prefer to only trade the most fresh zone. In this case, anyway, you can decide to enter at the second time. It is not as good as the first time, but it is fine. Then we continue to the downside. It is a good trade. We continue, and we come back for the third time. At the third time, it is when you don't want to enter the trade because this zone isn't considered fresh anymore. So the third time, never enter the trade. First time, always. Second times, do your own considerations. It depends also on you. Third time, never. The third time, the zone isn't fresh anymore, and probably we will get a breakout. Not always, but probably. That's why the freshness of the zone is so important. I was saying earlier, I showed you this chart, and I showed you that, okay, the first time we went to profit, the second time we went to profit, third time I said we were not going to enter here, but I will explain to you why later. I know most of you thought, okay, it is easy to say that you are not going to enter here because you already see the chart and you already see what happened. So you just say, okay, I was not going to enter here because you knew that you were going to lose money. But no, because I have my freshness rule, and I know that I was not going to enter the trade at the third time that we're coming to my zone because the zone isn't fresh anymore. So keep in mind these three rules, very important, so crucial to keep in mind: strength of the move, freshness of the zone, and sorry, the third rule is the, let me remember the word, it has to be on the same direction as higher time frames. So higher time frame confirmation is the third rule. As I said already, first two rules are so important. The last rule isn't so important because, as you can see, in all of the trades that I showed you so far, I never checked for the daily chart. So I never checked the higher time frame, and we were still in profit. We were still successful. So it isn't as important as other rules, but still you can consider it for extra confirmation. Here I was just noticing that we have another nice base from here, and it corresponds to current levels. I didn't notice earlier. Here you see a huge push to the downside, right? Here you have your green candle, which is the basing candle. Guess what? Perfect. Just didn't notice earlier, but here we just came back. Zone is fresh, push to the downside. If I saw that during last week, could have entered this. I believe it was 2 weeks ago. Yeah, could have entered this trade. Can I show you how to apply on the lower time frames, like 30 and 15 minutes? I can. Just keep in mind that it is the same, just the same, exactly the same, probably with a little bit less accuracy, because on the lower time frames you see less of what's going on in the overall market. Like in the 4 hours you can see where we're going, but in the 15 minutes you just see where we're going in the short term. But in a minute I will show you. Okay, so next we have two things: the Fibonacci, how to combine this strategy with the Fibonacci's, and how to enter at our golden zones. We have even before that, we have how to place stop loss and take profit. So first, stop loss and take profit, which I have talked about, I said earlier. Then we have the Fibonacci's, and then I will show you just some examples on the 15 minutes, even if I don't really like trading on the 15 minutes, and I prefer to do 4 hours and 1 hour. And that's why I'm teaching you how to do it on the 4 hours and 1 hour. Okay, before continuing, wanted to ask you if you have any question, just like I did earlier, before continuing. If you don't have any questions or any doubt, just say that it's fine, we'll continue. Right. Right, all right, let's go. So, how to place stop loss and take profit. I mean, take profit is easier, and I will show you why in a minute. But stop loss, it is crucial. Well, it is not hard, but it is crucial to understand where to put it. So you get your supply level, you see the retracement, and what you want to do is to always place the stop loss outside of your supply or demand zone. When I say outside, I don't mean like this. I don't mean like right outside of the zone, because it is too close, it's too risky. But what I mean is like something like this is fine. So about, let me see, just it depends on which time frame you're trading. In this case, just make sure it isn't right above it like this, but you give it some space. Not even too much. This is too much, of course, but just give it some space. All right, makes sense. And take profit. Therefore, you also have another rule right now. For this strategy, you're not going to take any trade that has less than 1 to 2 risk to reward ratio. So in this case, we see that if we placed our take profit right here, the risk to reward is 1 to 1.9. In this case, we will not take the trade if we really want to stick to our rules. But if we put it at the next demand area, then we can see that we have a 1 to 2.7 risk to reward ratio, and that this is a trade that we could have taken. So first of all, you need to understand where to place your stop loss. Stop loss is above the supply or below the demand area, and just giving a little space in order for the price to move. And then you put your take profit. First, you have to check that it is minimum a 1 to 2 risk to reward. So this was the minimum right here. And in order to place it the correct way, I mean, in order to maximize your profits, I suggest to put your take profit at the next supply or demand area. So in this case, you are entering at the supply and you want to close the trade before we reach a strong demand area. So here you have your big pushes. This is a demand. This red one here is the basing candle. Therefore, you draw your demand area, and your take profit will be before that area is reached. In this case, this is perfect, right? Now, let's see some other examples. Maybe let's go to the ones we had before. Well, let's see if we can go back. Thank you. So in this case, here we are entering a trade here, right? We have our supply, big push to the downside. We want to enter a trade because overall we are bearish. Of course, later we turn into a consolidation zone. We see a pullback to our supply. We put our stop loss here and our take profit before the next demand, which is here. I'm pretty sure that if we are entering right here, if we are entering right here, this should be almost a 1-to-2 risk to reward. Of course, we will need to check on trading view. So this is our risk, this is our reward, and I believe that it is almost a 1-to-2. So this could have been a trade that we were going to take. Same thing right here. We reach it again. Remember, freshness of the zone. This is the second time, so it could be okay to take the trade. If we come back another time, then no, we don't take the trade. But it could be okay. So again, stop loss, take profit, and should be about a 1-to-2 risk to reward ratio from here, which is the minimum that we want to take in order to take a trade, no less than 1-to-2 risk to reward. So this is where we would have placed our stop loss and take profit if we were going to trade this pair right here, this setup. Now, here I told you already earlier, if you remember, this was AUDJPY 4 hours. We identify this was the basing candle. Right now, I'm sure that after I taught you how to identify the basing candle, I'm sure that right now you are able to recognize them without many explanations. In this case, we are entering here, stop loss below the area, take profit at the next supply, which I showed you earlier, which is this one. And this is a supply, of course, as you can see, big push to the downside, basing candle, it's the green one right there. This is the supply. Or you have the second option, if you want to wait more, then you put your take profit here, even though I wouldn't advise it, because you already get, from your entry, you already get a nice 1-to-2 risk to reward. This is the risk, this is the reward. So even more than 1-to-2, this is almost 1-to-3. Now, let's see some other examples. It's really important to understand how to enter and place stop loss and take profit. In this case, we have our our demand area, which corresponds to our Fibonacci levels in between the 0.705 and 0.79. Stop loss below that area. Take profit probably, let me see. Well, it depends what's going to happen later, but probably here, since we had this push, so take profit probably here, and this is another very good one. Or even if you want to wait longer and do a swing trade, our take profit could have been here. Okay, Euro JPY, 1 hour, stop loss below. As you can see, if you place it right below it, you hit your stop loss. But if you give it some space, you don't. So stop loss and take profit, we need to identify a nice supply area. So this could be one right here. This could be a nice supply. I believe that it is better on 4 hours. Therefore, let's go to the 4 hours. And on 4 hours, we can identify, actually, here we have a better confirmation of what's our supply area. Here we have all small candles. Here we have a big push with a basing candle. So here it is good. And as you can see, perfect supply area. Went down after with this big push, came back up, went down again, came to test it again, went down, came again back up to test it and dropped. Perfect supply area. We want to enter EUR/JPY here. Well, this was the entry already. Stop loss below, take profit before this one, and that's it. So these are all very good examples. I hope you have clear how to place your stop loss and take profit by trading with supply and demand. Do you? Yeah, of course, you need to practice. Like I'm teaching you this, but I have practiced a lot in order to identify all of the areas of supply and demand just by looking at the chart. Like I look at it for 1 second, and of course, I can identify many areas which are good. In order for you to be quicker, of course, you will need to practice, but 100% you will get it. Like I'm sure that you are getting it already, that you have everything clear. Just practice, go to TradingView, go to forextribe.com, practice your supply and demand areas, and you will be able to identify them very quickly after some time. This is not a chat or a webinar where we talk about my signals, though. But please, I said this already earlier. I will answer your question, but we are not talking about other stuff. We are talking about supply and demand areas and how to trade them. So for my signals, it depends on your account size. Of course, if you have a small account and you cannot enter with more than 0.01 lot, sometimes it happens for some of my clients, then no, of course you cannot close half at 30 pips because your lot is too small. And I recommend you to close when we are at when I say to close 75% of the trade. If you have a bigger account, then follow my plan. We close a lot at 30 pips and then we close more later. Of course, if you want to change it, the most important thing is that you just put the stop loss at entry after 30 pips. Then if you decide that you prefer to take a break even instead of taking half of the profits, that's fine. But please follow the break even rule. And thank you, by the way, for the last comment. All right, so we have left about talking about how to identify the golden zones with the Fibonacci's. And right here, I can see that already we have some examples. So first of all, in order to use the Fibonacci's for the golden zones, we will need to trade only these two. So the base drop the drop base drop or the rally base rally. Of course, these two are not going to be for the Fibonacci's. First example is this one right here. We have the drop. We have two bases, this one and this one. These are two good supply areas, and we put down therefore our Fibonacci's from, in this case, since it is a downtrend, from the top to the bottom. And as you can see, I'm putting it from the body, not from the wick. And my key levels are in between the 0.62 and 0.79. Now you say, okay, then why did you enter here even if there is no Fibonacci confirmation? Because as I said to you earlier, Fibonacci's are for extra confirmation. So you can trade supply and demand areas just by using supply and demand areas and nothing else. All the examples that I showed you, most of them were successful trades. Very good trades with very good risk to reward and big profits. if you want extra confirmation, you will need to be able and also willing to wait longer, because of course here you are not going to enter. Honestly, personally, even if I didn't have my Fibonacci's, I would have entered here because it is a perfect supply level, so I didn't need my Fibonacci's to be down in order to enter. But if you want extra confirmation, you put down your Fibonacci's, you identify your supply zone, which is this one, and as you can see, our entry level, it perfectly corresponds to our 0.705 Fibonacci level. We reach it, we reject it, and then we push to the downside. Of course, stop loss, wait, entry, stop loss with some space. Usually I recommend to put it actually, if you're using the Fibonacci, it's a little bit above the above the last one. And take profit could have been all the way down here. Wait, actually here, because here you have your other, you see this huge push, huge candle, basing candle here. So take profit has to be before that, definitely. And we are almost there actually. And this was a 1 to 2.9, almost 1 to 3 risk to reward ratio. And actually this drop was about 200 and 300 pips. If we go all the way down here, probably here was about 270 pips. So this is the first example for GBP, GPY on how to use the Fibonacci's. I mean, as long as you use my levels and you use them in the correct way, so if it is in a uptrend, you put them from the bottom to the top in an uptrend. If it is a downtrend, the opposite, so in the downtrend from the top to the bottom. You use my same levels and you use them from the bodies, so you don't draw them from the wicks. This is the wick. In this case, this would have been the wick, but you draw them with the bodies. So here it is the highest body, here it is the lowest body, and that's fine. So that I had one question. Can I go over the Fib levels? Yes. So what I recommend to do is to put down your Fibonacci levels, put them all in the same color, go to your setting, actually deactivate the trend line so you don't have this line that was coming across here, and you have a more clear and less messy Fibonacci setup. You go to your settings and you just need the 0, 0.38, 0.62, 0.705, 0.79, and 1, and that's it. All the rest you don't need it. If you want, but only if you want, you can put another Fibonacci level, which is the minus, so minus 0.27. Let me see if it comes out. Yes, minus 0.27. Only if you want. It isn't necessary. You only need this level as a target. So if you don't know where to place your take profit, and you put down your Fibonacci's, you're waiting for a retracement to enter. Of course, I'm not taking into consideration supply and demand right now. It is just to show you how the Fibonacci's are working. You wait for a retracement to the Fibonacci's, you enter the trade, put stop loss below the Fibonacci levels. You don't know where to put take profit. Minus 0.27 is your target. Works as a target. That's it. This is all you need for the Fibonacci's. Apply them using them from the bodies. Enter in between these three levels and identify the supply and demand levels as confluence. Of course, I showed you that you can use supply and demand just by itself. You don't need them. You don't need to combine them. But if you want, you can. Well, it actually in 0.79 there is a demand level. It was close to 0.79, but it wasn't perfect. So I didn't want to show it. Okay, so some more examples. Well, here I showed you earlier. Here we don't reach. This is a nice example, actually. USD CAD 4 hours. You have this huge push to the downside. Go to the 1 hour to see if corresponds. And finally, on the 1 hour, you can see where the big push is happening from. I mean, the biggest push is happening from here, but in this case, it would have been a loss. And you know, now you are understanding why you need the Fibonacci levels. So you put down your Fibonacci's. This is exactly how it trades. So right now I'm teaching you, like earlier, I was teaching you only if you want to use the supply and demand. The way I personally trade, I start by recognizing market structure like we did in the beginning. Then I put down my Fibonacci. When I understand the direction, I put down my Fibonacci's. Put down my Fibonacci's and I say, okay, I want to enter at in between my golden zones. But I want to enter in between my golden zones, but I don't know where. Like I will enter at the 0.62, 0.705, or 0.79. I don't know. I need extra confirmation. And therefore, to get my perfect entry, I use my supply and demand. Because in this case, if I was going to do it from here, could have been a loss. And this, I mean, sorry, just to go back. If you only use supply and demand, you will still be profitable. You just practice and it works also by itself. You can make profit just by using supply and demand. But I'm just telling you that, like in this case, this could have been a loss, but if you combine it with my Fibonacci levels, it's even better. You have higher accuracy. So in this case, I recognize that I start looking for supply and demand areas in between this area right here. I see that this is a very big red candle and it has a basing candle right before it. And therefore, I put down my supply. And just by putting down, understanding the direction, putting down my Fibonacci's and looking for a supply inside my golden zones, then we get a perfect entry. And this is like to the peep, like perfect. You just enter and it goes straight to the downside. And let's see if we want to put a target. This could have been the first target here if we didn't want to hold any longer. Stop loss above the 0.79 and also above the supply. Take profit before the demand. Risk to reward 1 to 5.7, actually 5.8, which is crazy. And this drop is about 150 pips. All right, so this is really how it works. I hope it makes sense. I hope that you're going to practice both with the Fibonacci's and also without the Fibonacci's. Right now, I will take a moment to answer all of your questions because so far I explained everything that you needed to know in order to use the supply and demand strategy. This was a webinar to teach you my supply and demand strategy, but you were lucky, and together with the supply and demand strategy, I also put my Fibonacci strategy. Never saw trading like this, to be honest. Well investment, this masterclass. I'm very happy about it. Very happy about it. I was sure that this was going to be a game changer for many of you. That's why I advertised it a lot. Maybe some people were kind of tired about me advertising this strategy, this masterclass, but I was 100% sure that it was going to be helpful for all of you. By the way, I recorded all of it. I know that we finished about 20 minutes earlier, but we covered everything very, very fast. How to do it for quicker trades? Well, I can show you. I don't usually do it, but I can show you. You just have to go on lower time frames. Okay, can I do an example with backtest? I don't have, this is my second account for TradingView, because if I went to my first TradingView account, which has the pro version, all the charts had the analysis already, and I didn't want to mess it up. So I used another account for TradingView. I don't have the replay function on this one, but I showed you some examples like EuroJPY. Like I didn't only went in the past to show you some examples, but I also showed you some examples for the upcoming week. Like here, I told you that this is EuroJPY. We understand that it is going to the upside. We see this huge push to the upside. We go to the 1 hour to check the basic candle, because on the 4 hours we couldn't see it. Finally see the basic candle right here. Put down our demand zone. This was our first entry. We weren't able to enter. If this week we come back, we need to zoom in right now, right here. Where do you see big candles? I see big candles from here, huge push. Therefore, we put our basic candle, it is that red candle right there. And we already came back. This was a nice entry. And right now, during next week, maybe on Monday, if we see the right confirmation, then maybe we can wait for an engulfing candle or a pin bar. We can enter a trade. Enter a trade on EuroJPY. So this is my analysis actually for EuroJPY for that upcoming week. Stop loss should be below the main demand. Take profit to the next supply, which is actually here. You see this big candle here to the downside. Take profit. Risk to reward is 1 to 2.6. Very good. About, let me see how many pips. See, this is a small trade, like the one who was asking for smaller trades. 1 hour time frame, same thing as 4 hours. 65 pips, take profit, and 25 pips as stop loss. Works the same, just the size of your take profit and stop loss will be different. Do you ever use it on the daily? No, usually I start analyzing from the daily, but just to understand where the market is going. But then I go to the 4 hours to understand my supply and demand areas. I didn't understand the question about, from your chart you have information till November 6. How do you apply FIBO on chart, on a fresher chart? I didn't understand the question. With this strategy, you just hold until take profit. Just after 30 pips, just put stop loss at entry, but don't close before the trade goes to take profit. When and where do you upload the recording? By tomorrow, everything will be uploaded and sent to you. I mean, by tomorrow night. And I will either send you a link to watch it, or I will decide if just to upload it on Telegram or just have send you a link. Even if we are not students of your course, can we be in contact with you if we have any doubts in the upcoming weeks? Yes, you can. Of course, you are my student since you are studying my supply and demand masterclass. So you can ask me any question. By the way, just a little announcement. I didn't know if I were going to do it or not, but for everybody who is in this masterclass, if you want to, if you don't have my course and you only have this masterclass, but you want my course, I will offer you a 50% discount. Of course, if you want it. If you are fine with this strategy works very good by itself. Maybe you don't want extra information about other strategies. It's fine. I'm just telling you, if you want also the course, you have a 50% discount. For the people who have already my course, and of course they have my course already, they also bought this masterclass. For all the people who have both already, I will give you a special price for doing a one-on-one session with me. Of course, if you want. If you don't need it, I'm happy for you, because it means that you're making good profits already, you are doing fine, and that's what I hope. If you need help, of course, I have this offer for you. For the people who don't have my course, you have 50% discount. For the people who have my course and already have everything, you can get my one-on-one sessions for a very low price. So just DM me. Any group supply and demand discussion after this, I will take that into consideration. But I had some bad experiences in the past. I created a group for my students, a group for some people, and what happened was that they were discussing about the signals that I sent in my VIP channel. And you know what happens? Like sometimes we have many good days, good weeks, but sometimes we had a bad day. Like for example, last week, Monday was terrible. Sent 2 signals, and all the 2 signals went to stop loss. And after that, all the remaining of the days of this week were very good. But what happened when I have a group, when there are people that talk about this? Like they should be talking about, I don't know, supply and demand or my strategies or whatever, but they start talking about the signals suck and whatever. So I decided not to continue with the group anymore, and I will take it into consideration. Maybe we'll do a try. If everybody keeps a correct behavior, then I will keep it. If not, I will delete it. We will see. How do you sign up for the course? Just text me on Telegram. I will send you the link and also the promo code for the discount. How much is a one-on-one with me? A one-on-one with me usually is, well, it depends. It depends how many hours you want to do. But of course, since you are attending this this masterclass, I can do, let's say, a very small price. Like I have to think about it. I honestly don't know, but I can do more than 50% discount for the people who are attending. Do you need a code for 50% off? Yes, you need. If you want, I can create it right now since we are connected and we are done with everything. Just give me a second. Right. Give me a second. No. I really appreciate the discuss group for people. Yes, since a lot of you want it, I will really take it into consideration. Maybe it will not be available from tomorrow, but let me think about it for a second so I can decide if it is the case to do it. I want to do it for you, so because I know that all of you are willing to be better, willing to get better. So let me just think about it for a second. I'm creating the promo code right now for the discount on the course. So 50% discount. Promo code is, let me think about it, is masterclass. No, wait. Promo code is Edward. Just put Edward as promo code. And for the product is the course, right? Right, so if you want, on my website, you find 50% discount for my course. And the promo code is Edward. How much is a one-on-one? Okay, well, it depends. As I said, I have different bundles. It depends if you want one-on-one session or if you want many one-on-one sessions. And depending on that, I decide the price, depending on how many hours you want to do. Of course, as I said already, since all of you are here right now, we had a very nice webinar all together. I appreciate like all the comments that I got here in the chat. I'm giving 50% off for both my course and also for my one-on-one classes. So depending on how many hours, how many things we are going to do, I'll give you 50% off. If you do really a good discount, I will take the one-on-one. Well, yes, 50% discount. Do you ever try to apply that strategy on different markets? No, only on Forex. I want to know the price for a one-on-one class with you. I wonder if the strategy is viable for cryptocurrencies. Well, it works with cryptocurrencies, but you need to practice like everything. Does it work also with stocks and US 30? Yes, but as I said, I am like I mastered Forex. So I know a little bit less about cryptocurrencies. Like I invest in cryptocurrencies. I have a big portfolio on cryptocurrencies, but I don't trade them. It works because supply and demand works on anything, like on, as I explained earlier, on oranges prices, on apples prices, it is the same. Works on everything. But you need to practice. Edward with capital letters? Yes, Edward with all capital letters. Edward with capital letters, it is the promo code for my course to get 50% off. Is it possible to show us the example when this strategy or its combination didn't work and explain why? What do you mean it didn't work? Like sometimes, so first of all, keep in mind to follow the rules. So if the zone isn't fresh, you don't enter. And that's the first thing. So you're not going to lose money if you follow the rules. Second thing is that we will not win every time. And sometimes there is not going to be an exact reason. Like you can have a strategy, you can have your rules, you can follow your rules and your strategy, but you're not going to win every time. And that's why you need risk management. In this case, we saw many successful trades from here. But for example, maybe on Monday, we will enter this buy right here on EuroGPY and we will hit a stop loss. And you say, okay, why this strategy was good? Why are we hitting stop loss? Because there is no strategy in the world that works 100% of the times. Maybe we hit stop loss on this one, we lose 2% because we are risking 2% per trade. Then we enter another trade maybe on on gold. We are entering another trade from here, since there is a nice demand level, which also corresponds, I'm sure. See, I just didn't even need much time to recognize this. Corresponds to our 0.62 Fibonacci level. Maybe we enter this one on gold with a 1 to, let's say, a 1 to 3 risk to reward, and we make 6%, because if you are risking 2% and you're losing 2% when we hit stop loss, if we hit take profit, you're making 6% if the risk to reward is 1 to 3. And therefore, yeah, sometimes you lose, sorry. Most of the times you win if you practice the correct way. Please practice this strategy. I am able to recognize it very fast, as you saw here on gold, but I'm sure that if you practice, you will be as fast as me. Practice, use the correct risk to reward, the correct risk management. Sometimes you will lose, sometimes you will win, you will be in profit. Does the course go into detail with supply and demand? No, this is the only supply and demand video that I'm doing. Everything is here. On my course, there is nothing about supply and demand, but there are all my other strategies for scalping, for intraday, for technical analysis, and some little secrets about trend lines and everything. But this is the only strategy, and these are all the details that you need for supply and demand. With this strategy, for which percentage can you increase your account per month? Well, okay, so it depends on many things. Depends on how much you're going to risk per trade, how much your risk to reward is going to be on average, sometimes 1 to 2, sometimes 1 to 3. How much you're going to risk per trade, 2%, 4%. I recommend to never go more than 3% per trade, because that's very risky. So please, it depends also how much you're going to practice this strategy. Like how much are you going to be confident? How much are you going to be able to recognize the right supply and demand levels? Let's make an example. Let's say that you are very good, and in a month, well, let's say in a week, you enter, I don't know, 7 trades, or let's say you have 5 trading days, let's say 5 trades, 1 day per day, 5 trades, 2% risk per trade. Let's say you lose 2, win 3. Risk reward minimum 1 to 2. So let's say you enter all 1 to 2 risk to reward ratios. So at the end of the week, you lost 4%, but you gained, since every win is a 4% win, because the risk to reward is a 1 to 2, sorry, here I didn't write it, 1 to 2. You're getting 4% per winning trade. So you're getting plus 12%, which is equal to plus 8% in 1 week. And this is just by entering 5 trades, losing 2 trades, and winning 3 trades. With a 1 to 2 risk to reward ratio, this is your percentage in 1 week, plus 8%. In 1 month, it is 32%, which is very good. So it actually depends on many things, but this is a good example. I already bought lifetime VIP. Can I pay difference? Luca, I'm sorry, but my course was for $149 without the lifetime VIP included. I just decided to increase it by 10 euros and put the VIP channel together. But more than giving you 50% discount, I cannot do more than this. like 50% discount is a good discount. So I cannot actually go more than 50% at the moment. I mean, not at the moment in general. Did you learn trading by yourself or did you have a mentor? I took many courses. I had some mentors, and then I took all of the informations and created my strategy. If you close half lot, it's not 1 to 2 at the end. Correct. And that's why for the supply and demand strategy, I told you to not close half lot. Just put your stop loss at entry, but wait for your take profit. Okay, so if there are no other questions, and this is all for this masterclass. Oh, wait, sorry, there is another question. Which pairs do I prefer for scalping? Euro USD, GBP USD, gold, and GBP JPY. Yeah. Okay, so as I was saying, I hope you liked it. I'm very glad that many of you were happy about it. I will send you the recording tomorrow. By tomorrow night, I will upload it. I will find a way to send it to you. And just keep in mind that for a couple of days, I will keep the promo code available to get my full course at 50% discount. The promo code is Edward, and you get 50% discount on my course, if you want, of course. Oh, wait a second. Edward. Yeah. No, I will send just the link privately for maybe in the supply and demand Telegram group. I will send the link so everybody can have the access to the recording. How long is the promo code available for the course? I will keep it available for maybe this week until Friday. Until next Friday, it will be available. So you have 6 days to get 50% off my course. And also, if you want the one-on-ones with me, there is 50% off for the one-on-ones too. So just text me and we will manage the one-on-ones. See you. And if you have feedbacks, I would appreciate a message for some feedback. Always appreciate it. See you and keep practicing, keep getting better. And I'm here to help if you have any questions.